So let's have a quick look to see what cable is doing and what setup we've got potentially here for this one. So I'll start with the weekly time frame so we can kind of just get a good feel for where we are within that cycle. And since we're talking about swing trading, I'm going to kind of have that in my mind to kind of give you the examples based around that idea. So when we're looking at this, and if I just kind of go out again on the weekly, we'll just take, we'll just do a kind of rough and ready approach. You can kind of see that, this is where it's spending some time at the moment. If you're looking at this also from a historical point of view, it's at one of the lowest points it's been, since 1998. So we went as low as here. It's obviously had a rally now, but the potential is that we go back towards these highs at some point. So if we're looking at this on a weekly time frame and we zoom in, when you're looking at swings, essentially what you're looking for is, if you see that, that's a swing, that's a retracement, that's a swing, that's a retracement, that's a swing, that's a retracement. So now as a swing trader, you're now looking for the next opportunity to take that swing up, okay? So that's kind of how it works. If we just remove that, and and that could be a pattern breakout, it can be a trend line breakout, it can be various number of things. So if we kind of zoom in over here, so I'm just going to spend a little bit more time than I normally would on the weekly time frame and the swing trading idea. So if you have a look there, you've kind of got your resistance line, which is where we are. And there's different ways we can connect this. Like some people will say, okay, yeah, you can make this into a channel, which you can. Otherwise, we'll see this as as this kind of triangle there. This is kind of this is the subjective part. Okay, this is the subjective part, and whatever you can see there, it's neither right or wrong, because at this point we don't. We both are valid, right? You can see there a potential triangle, you can see there a potential channel. I guess the most important thing is that you're looking for, at some point, for this market to break and then go towards these highs. Now, one of the common ways of playing swings is to look at that. This is the safe way of playing it, I guess. Is to kind of look at the way the market is moving. So you have a high point, a low point, a high point. That one's kind of like an equal point, and then you've got another low. The most important thing here is if you kind of take these high points. These high points are getting lower, right? So that's basically showing us that the market isn't yet ready to go up. So as a confirmation, what you want to see, so people that want to trade with swing trading but don't want to just jump in, what you can do is you can wait for the high to be taken out so that you have a higher high. And so you would say that's a swing, and then you get a retracement, and then you would then play that swing there, because you've confirmed that this structure is now broken. These lower highs are now broken. So then you can kind of get in. And if you were going to trade that way, you can also go to the lower time frames. So if I just zoom out. So if this market was to break here, now you might say, well, great, now this high has been taken out, I want to wait for a retracement, and then I want to go up here. However, what happens sometimes is, like, this pattern breaks, and I'm sure you guys can relate to this. It breaks, and you're like, yeah, I'm going to be a nice, a good trader. I'm going to wait for my plan. I'm going to wait for this to come back here, and then I'm going to buy it for the perfect trade. And it never comes back, right? And it goes all the way up. to where your target was and you're not in it. And I'm sure most people can relate to that. I know I certainly can relate to that. So what you can do is, in this phase here, once you've got that confirmation that the swing trade is up, you could then go to the lower time frame and trade the mini swings, like on a 15-minute chart or an hourly time frame in this phase here. And so that way you're like, okay, I'll take that trade, I'll take my profit. Retracement, I'll take that trade, I'll take my profit. Take that trade, I'll take my profit. And so even if you got stopped out, because let's say you catch 2 or 3 winners and you're here, and then the market does come back, well, you know, at least it's only one trade, and you may have even caught 1 or 2 winners as well. So, and you don't miss the trade. So that's kind of like an in-between. So with that all being said, so this is kind of like your weekly time frame. Let me see if we go over to the daily time frame. It just makes it a little bit easier to see. So again, you can kind of see this market is retracing right now. It's in retracement mode, and you need a break for you to confirm that swing up. Now, what some people do, the people that are a bit more confident, that are brave, they will buy at the bottom here. Okay, so they'll buy at the bottom here, looking for that next swing up. But it is risky because you've got no confirmation if you don't understand. So like, let's say you bought here, you'd be like, great, but how do you know it's not going to do that? And that's where, you know, having a bit more knowledge really helps. So let me see what we can do here in terms of cable. So one of the first things I'm going to do is I'm going to put in my up Fibonacci so I can understand where the swing comes in. Now, that's pretty great because for those that have studied the way that we trade, they'll understand that the market has a 90% chance that it's going to go back to at least its first Fibonacci target, which is the 38.2. So when you're here, you don't really want to be buying it in this zone, right? Because that's called our fade zone. What you want to wait for is at least a pullback to the 38.2. Now, what's really great about what we see here is that we've done that. So that could have been a buy for somebody, and it's also matching there with an old resistance. So if somebody wanted to jump in front of the train going down for the potential swing up to here, that would have been a nice entry, okay? For those that are a bit more risk averse, you're now saying, well, at least we've come back at least to there. I'm going to wait for that pullback. I'm going to wait for that high to be taken out, and then I'm either going to get the pullback there, or I'm going to trade that lower time frames up. Now, I can do one more thing here, which is to see where the down fibs are. And that was, if I just zoom in, so we've just completed the D. We had an A, B, C, D. That was the projection. We went to the overextension near the purple line, and then we basically jumped up. So, you know, this probably here would have been a decent buy zone with a stop here, and you'd still be alive there. So now you kind of have to wait. So the way that you'd want to consider doing this would be something like this. You could do a manual fib from there to there. Hold on. Why is it not selecting? Let's take the ray off. A, B, C, D, A, B, C, D. So the D is just completing now. So we're expecting a pullback soon on cable, and then you could wait to buy that. But personally, I don't recommend that unless you're going to get a pullback here. So if you're going to buy this, in my opinion, I would be waiting for maybe like a double bottom here. if you want to buy. Otherwise, the safe way of doing it, as I said before, is let this channel break and then either wait for that pullback there or go to the lower time frame and trade it up there. That's kind of really the only way of playing this right now. You're at the upper part of the channel, you're at resistance. It doesn't make any probability sense to get in here. Here, yes, it makes sense. You're going in front of the train, but at least you have the potential upside. Here, you're basically buying straight into resistance. So my preference would be for you guys would be to let this market break this channel, ideally take out the high, and then get it on the pullback or go to the hourly time frame, which at the moment isn't going to be too valid. So this is the hourly time frame. One thing you can do to prepare as well is when you're looking at the hourly time frame, if you prefer to catch the swings here, like on the lower time frames, you can also add in your moving averages on this time frame. So let's just add in one just as an example. So that's your, let's change that to 50 and make it a bit thicker. So that's the 50 moving average. You can see the market's there right now. And then because I would also add in the 21 and I'd also add in the 200. And you can use those as a point of support to buy in that direction. But like I said, personally, I wouldn't want to be getting in just before this resistance, although there might be a little bit of room for one swing up. So if you wanted to do an intraday swing, you could look at this here as a 50 moving average to try and catch it towards that channel there. And if that's the way you want to trade it, what you can do is you can also add in the fibs going up to see where we are on those swings. And that's perfect. That's exactly what you want to see, guys. So you can see there, the hourly time frame is predicting. So for those that don't understand this, it's predicting that the Fibonacci is going to complete its sequence right there on the trend line around 138.33. So if you can find a nice entry in this zone here, and it makes sense from a sort of reward to risk point of view, you can try and catch that swing up there. Alternatively, as we said, you can just draw like little mini channels here, and the setup could be for you, right? This is like the more conservative one. It breaks, you buy it, or you wait for a pullback, you buy it, stop below the channel, and then you target that next swing up. Okay, so there's a few different options there. Hopefully that's given you some insights.